As the Fed has started to loosen monetary policy, investors are still rushing into equities. But my next guest says gold is still the primary bullish standout, noting that positions on the metal have pulled back to near neutral versus the extreme net long and overbought price conditions of just a few months ago. Joining me now in studio, Mike McGlone, senior commodity strategist over at Bloomberg Intelligence. Mike, good to have you back in studio.
Thanks for having me.
Good to talk gold with you, because you still have hope for the metal, which has been struggling these past few months, struggling to hold some key levels, but you say fear not.
Oh, it's just normal back and fill in the bull market. What gold's doing right now is just simply retracing the bear market we had for, who knows, it was actually from 2013 it really declined. That's all we're doing right now, and the fundamentals and technicals are tremendous. Now, you mentioned a few things I published recently. Yes, in August, in September, got a little bit overbought. Markets are supposed to do that. It's come back to a good level, but it's still above 1,400 in terms of dollars. And that was the key resistance. Remember, that held for 5 years. We're just making the next leg higher and just needs a catalyst for that.
So do you feel that people this summer just got too excited and this talk of $5,000, even $10,000 gold is just...
Classic signs of peaks in the short term when people do that.
Right.
And now we're back to more normalization. It's a bull market. It's been brewing for years. We've discussed about this before. It's just getting started, and it has some key catalysts to really kick it in. One is at some point, the dollar has to stop rallying. I watched the trade-weighted broad dollar, all-time highs. If you look ahead 10 years from now, if the dollar was really getting beat up, you'd be worried about the gold going much higher. But dollar's so much high, at some point it's going to come back. And that's going to happen just a matter of time. And in the meantime, gold's showing divergence.
Well, I guess looking at the gold price, there's so many factors right now that we have to pay attention to, right? Is the trade war coming to a resolution or not? We have a presidential election in 2020, which could bring a lot of volatility to the metal. Of course, the US dollar, equities, which seem that they have no sign of slowing down. So how do you factor all of this in when you're looking at the price of gold?
Bottom line for me in gold is volatility in the stock market. S&P 500 bottomed a few years ago. It's heading higher. Yes, equities are still heading higher. But what's really repressed gold, the prices the last few months, is record highs in the stock market. How long is that going to last? We all know that's unsustainable. So, and then all the issues with the election, it's going to be, like we discussed earlier, it's going to be contentious the next year.
It just feels so long that we've been saying that it's unsustainable, this rally in the stocks, but it just...
Well, that's part of the key factor. It's sustainable, yet gold's still inching higher, and gold's looking ahead to the end game, which we all know. U.S. debt to GDP is increasing without stop. Bond yields are declining, and at some point that's going to change. And gold, and I don't see a scenario where gold doesn't go higher unless we have really repressed gold stock market volatility for a long time, and a dollar going up for a long time. Otherwise, gold should appreciate. Now, it's already made new highs in terms of the euro, the Canadian limi, the Indian rupee, you name it, the British pound.
And let's look at the central banks buying gold, right?
What are they doing? They're converting pieces of paper to that solid physical asset. We all know gold is a great intermediate, is a great really supervisor for pieces of for actual paper currency.
So if 2020 should be better for gold, or I guess 2019 was a good year for gold as well, but where do you see prices headed?
Higher. I just don't know how much higher. My initial target I'm looking for is 1,700, and that's terms of the dollar, because that's just the high from 2013. We're just retracing that bear market. I expect markets to get exciting when we take out the old highs, getting above 1,900, and that's just, to me, a matter of time.
Before I ask you about the cryptos, let's just get your thoughts on silver at $17 right now. A lot of silver investors just waiting on the sidelines, waiting for the metal to take off. But do you really need that next rally in gold?
Yes. Unfortunately, silver is just following gold at the moment, and I view that as somewhat unfortunate, because typically what silver needs to really break out is peak dollar and copper to do better. At some point that should come, but it's going to be a little while, and I'm afraid that we're getting to that point in this economic cycle. People are going for the quintessential diversifier asset, which is gold, for now. Silver should continue to track behind, unfortunately. So but once the dollar peaks, silver usually rallies at 1.5 times gold.
So as Mike McGlone, the investor, where would you be right now if I had to put you in one of the precious metals boxes? Would it be gold, silver, platinum, palladium? What would you be buying?
I like all the above. Palladium obviously is getting a little expensive, but I like that diversified portfolio overweighted in gold. I like all the above. It's just hard to differentiate which one, but we have to be cognizant of the fact that gold's really driving most of it right now. Palladium's a little different story.
Let's talk Bitcoin, because this Friday, the cryptocurrency hitting a 6-month low now. What do you think of the crypto space?
Similar to gold. I differentiate into one really crypto. Bitcoin to me is becoming a digital version of gold. It's getting really adopted versus all the other cryptos are like a gaggle of geese that just don't matter as much. Bitcoin has won the race. It's becoming like digital gold, and everybody knows now it's the go-to in the digital space, and at some point it's going to continue. And to me, it's just trading more like gold now.
So it is the brand name in the crypto space, right? But usually in the past, when we saw this risk appetite amongst the investors, we saw them flocking to Bitcoin. So has this mindset changed?
I think so. Past performance, not indicative of the future. Bitcoin has matured now. Futures are getting active. We're going to have ETFs, backs out there. So the old days, the first 10 years, it just had a run up. Now it's in a range that's going to migrate higher. Volatility is one thing I think that's going to almost be certain to absolutely get crushed, to collapse, stuck in a range.
May 2020 will be an important month for Bitcoin. Bitcoin halving will occur. It's an occurrence that happens every 4 years. What could this do to the price?
It's one of the unique things about Bitcoin. It limits supply. That's part of the reason silver has a problem. There's a lot of potential supply that can come on. Bitcoin, we all know, has limited supply. I mean, there's forks and everything, and that's just at some point that's going to happen. And as a commodity guy, when I see something with supply that's guaranteed to be limited, yet demand is picking up with more adoption, I view that as very attractive for price.
All right. Mike McGlone, always good having you in studio. Great thoughts. And come back for our Outlook, which we are launching in December.
Looking forward to it.
We'll get more deep thoughts from you on that. Thank you so much.
Thanks for having me.
And thank you for watching. We will have much more for you, so be sure to stay tuned to Kitco.com.